Welcome to Business Insights Daily. I'm your host Sashank. Today, we're looking at a pivotal moment for one of the original fintech giants, PayPal, a company that practically invented online payments, announced on Monday that it has submitted applications to become a bank in the US. It's filing with the FDIC and the Utah Department of Financial Institutions to launch PayPal Bank. The plan to offer interest-bearing savings account and small business loans directly to the millions of customers without relying on third-party partners. This is a company that already has a banking license in Luxembourg for its European operations, but in the US it has always operated as a money transmitter, partnering with traditional banks to hold funds. So now it wants a charter for itself. So why now? Why does a tech company with heavy regulatory burden of being a bank? And what does this tell us about the future of how we manage our money? Let's dive in. Pivot. Why become a bank? For years, fintechs like PayPal, Square, and Stripe avoid becoming banks. Becoming a bank is hard. Your capital requirements, strict oversight, compliance costs, and regulators looking over your shoulder constantly. It's much easier to partner with a small bank to hold the deposits while you build the cool app on top. But PayPal is changing its mind. Economics. When you partner with a bank, you split the revenue. By becoming a bank, PayPal can hold the deposits directly. That means it can lend the money out, for example, in small business loans and keep the interest spread. Cuts out the middleman. Stickiness. PayPal wants to be the center of your financial life, not just a checkout button. If they can offer you a high yield savings account and a business loan, they're less likely to leave for Chase or Wells Fargo. It turns a transactional relationship into a deeply sticking banking relationship. And third, relying on partners slows you down. By controlling the chain and the charter, it controls its own risk models, roadmap, and PayPal's own destiny. It's moving from being a layer on top of the financial system to becoming a pillar of it. So this didn't just happen in a vacuum. PayPal's move comes after a wave of companies tried and sometimes failed to do the same thing. Block got its industrial loan company ILC charter approved in 2020, allowing it to open Square Financial Services. SoFi became a bank acquired by Golden Pacific Bancorp to supercharge its lending business. And crypto firms. Earlier this year, we saw a clutch of those companies applying for charters, trying to legitimize their operations and gain direct access to the Fed's payment rails. PayPal is essentially looking around and saying, if we want to compete for the next 20 years, we can't just be a payment processor, we need the full toolkit. But it's not without risk. The regulatory environment is tougher now. Regulators are skeptical of tech companies playing banker. PayPal will have to prove that it can manage risks just as well as a 100-year-old institution. Now, what does this mean for PayPal for the average user? As a small business, if you sell on PayPal and use it for invoicing, you might soon get loan offers directly from them, approved instantly based on your sales history, not your credit score. If you see high yield savings account embedded right in the app where you keep your balance, encouraging you to leave money there instead of cashing out your checking account. For some, an FDIC insured PayPal account feels safer. For others, it might feel like big tech encroaching upon our hard earned money. It signals a future where the line between tech app and bank branch is completely erased. So, as PayPal files its paperwork in Utah and Washington, it's not just a legal maneuver. It's a declaration that the future of finance isn't about destroying banks, it's about becoming better, faster, and digital versions of them. And for a company that started with the mission to create a new world currency, settling down to offer savings account and business loans might seem boring, or it might be the smartest, most profitable evolution they've ever made. This is Business Insights Daily. I'm Seshan. Thanks for listening, and I'll see you next time.